Hey guys, hope you're all having an amazing Monday. We got two things to talk about today. One is regarding short sellers in the US, and the other one's regarding a puff peeve editorial by some corporate media shill that's trying to make it seem that GameStop is in this troubled financial position when really right now it's honestly quite the opposite, and it's actually hilarious the things that he goes on about. It's almost like they're coping about the fact that GameStop's poised to be profitable fiscal year 2023, depending on how well they do in the fourth quarter. So they can't stand that this company just did a 180 from 2021 till now, fundamentally speaking, of course. And they're coming up with all kinds of crazy stuff, so we're going to be going over that today. So let's go over the funny one first. So as you guys know, companies like Melvin Capital and Citadel, they love shorting companies into bankruptcy. We've known that for years. Many short sellers in early 2023 did not pivot at any point or reconsider their short positions at any time this year, even while the U.S. economy was improving. And as a result of that, according to Ortex data, they're apparently down to $145 billion in 2023 so far. Those losses came in the face of the rally that ramped up in the fourth quarter with the expectations that the U.S. Fed is done raising interest rates and will likely pivot to cuts next year. So that was pretty crazy. I mean, $145 billion in losses. I mean, how are these people even considered expert financial analysts or expert financial advisors? This is absolutely insane. How do you not even hedge when the market's rallying, when the market's when the economy's improving, when you see interest rate going down? Inflation, not interest rates, but interest rates are poised to go down as well. How do you not pivot? How do you not hedge to calls, to buying long-term positions? Because even if the market was going to crash, the prices that we've seen for Microsoft or Apple, those have been amazing. I've personally been buying like crazy. How do you not hedge for that? And now they're looking at over, $145 billion in losses. That's not any small amount. That's bankruptcy, which is honestly what they wanted for GameStop, which is so funny that they're now the ones, struggling. As we talked about last time, they also have debt now as well, which is crazy because GameStop has none. So outside of that, let's see here. I do want to note that Ortex not the best reliable source for this kind of data, but still, I know I've seen a couple articles talking about hedge fund losses and how many institutions in the US are struggling now because they had a lot of short positions which have blown up in their face. So that's funny. But this next part of the video, this is what I really want to talk to you guys about. Before we go over that though, I do want to invite you guys over to my Discord. I've seen a lot of you join over the weekend. Thank you all so much for joining. If you haven't already, just click the link in the pinned comment already. We have so much content. It's crazy, man. If you're looking for educational content, if you're looking for signals for entry on penny stocks, if you want options, we have all of that. Just take a look at the trades we've done today. Just take a look at them. We've been killing it. It's been a total streak of just W's, freaking wins through and through. So come on and join. Linked in the pinned comment. Let's start going over this thing because this is hilarious. This is just salt. The amount of tears coming out of these paid media shields is second to none, bro. These people are just beyond cringe. I kid you not. What we're about to go through, what I'm about to read to you guys, is just pure comedy. Check this out. The Messenger's Thornton McHenry, he published an article titled "GameStop is Ryan Cohen's hedge fund now, and the cult investors fans are ecstatic. I love to see that they're still trying to bash well-informed investors as cult members, because I guarantee you that your typical GameStop investor knows enough about markets and regulations at this point to be almost certified with a FINRA's SIE or a Series 7 almost. Everyone that is invested in GameStop knows exactly why they are invested in the company, the risks associated with the investment, and are consistently informing themselves about, the company, like the news that come out, theories, everything via whether it's Super Stonk on Reddit, YouTube videos, press releases, or any other type of source of information. We aren't gullible. We simply just happen to take the opposite side of the trade that the benefactors of these low tier wannabe relevant loser media companies took. The fact that GameStop's entire outlook now looks bullish, with all those Wall Street analysts now recently having been forced to go back and reassess GameStop's fundamental values given their latest earnings report, which now puts the company at a likelihood of finishing the fiscal year 2023 year profitable. This fact alone, ladies and gentlemen, it pisses them off. It gets under their skin. I guarantee you that. The fact that GameStop right now, and on December 18th, 2023, as I am making this video, the fact that the company has less debt than Citadel, that's a huge cope that no amount of pretentious comments can upset. We are going to go over this Smooth Brain article, highlighting the best parts and commenting on them because I have nothing better to do. I had a pretty stressful day so far, and there's no better refreshment than a cup full of Hedgy simping tears. So here we go. So this Hedge boy, he starts off the article by saying that the handling over the balance sheet of a publicly traded video game retailer to its CEO so that he can trade it like a private hedge fund wouldn't likely go over well with most investors, and that luckily for GameStop, its shareholders are not most investors. So excuse me, what do you mean most shareholders are not most investors? That's kind of an oxymoron and an attack on retail, to be honest. He says that GameStop acting as a hedge fund wouldn't go over well with investors, yet to this day, until I came across this very article, I had not seen a single person complaining. Now, granted, some of us have indeed kind of questioned the move. It's a total game changer. And of course, some concerns and questions are going to be raised, even by myself. But investors haven't bashed the move. This is just him making stuff up to make it seem that this move has been rejected by the market. But if you look at, the GameStop stock, if you look at GME today, past its earnings, they're absolutely killing it. I believe they are over $18 a share right now. Let me see. Yeah, they're at $18.34 as of right now at 2 p.m. in the afternoon. The company hasn't rejected the move, so I have no idea what this guy means when he says that, when he says that the markets, that investors are rejecting the move. That's not true at all. Post earnings, the stock has performed really, really well. They've gone over 20%. Yet I bet you later in the article he's not gonna bring this up at all. In case you guys missed out on that one video, in case you guys don't know, GameStop CEO Ryan Cohen is now he has now full authority to manage GameStop's investment portfolio. The board expanded their investment policy to allow Cohen to invest GameStop's money in stocks and bonds. The author of the article then says that Wall Street has not been applauding the board's decision, which would be a massive understatement. Of course, they wouldn't be, applauding GameStop's move. I give him credit. I am almost certain that they did not like the decision, given it changes everything for them. You see, I too would be freaking livid if the company I tried to short suddenly became profitable. If the company I tried to short changed its business model to a holding company that could attract a whole brand new of potentially interested investors, right? Trust me, I know Wall Street is far from applauding the board's decision. Of that I have no doubt. I bet you that they were pretty much holding meetings after hours trying to find a solution to this, because the coping with Coke and hookers ain't no longer cutting at the fact that GameStop is and GameStop will be here in the foreseeable future. We aren't going anywhere, and neither is the company now, as far as we can see, according to the earnings, and that hurts them deeply. Since this announcement, GameStop stock has run over 20%. The author of this joke of an article does acknowledge this, but then he follows it up with another low blow, to show his dislike for GameStop investors. He says, and I quote, GameStop's rabid retail investors who trade stock tips on Reddit and other social media platforms see things differently. He then quotes a couple people expressing optimistic sentiments about, the changes in GameStop that he came across on Reddit. And he makes a couple anecdotes about how GameStop investors are simply people that never got past the 2021 rally, which, people, he's essentially saying that people simply cannot accept the fact that, the party's over, which is how he rationalizes everything as far as I can see. And lastly, he cautions investors by saying that Ryan Cohen's attempt to replicate the success with his 10% stake bid in Bed Bath & Beyond failed, with him liquidating his stake in August. He was essentially trying to scare people into thinking that Ryan Cohen doesn't know how to invest. Of course, he would not point out the fact that Ryan Cohen also invested in Apple, Wells Fargo, and GameStop before it rallied. So he's just cherry picking at that. There's a lot to unpack, so let's go one by one. So yeah, superficially speaking, he's right about the fact that GameStop investors never really got over the fact that, in 2021 we got shafted. That isn't we know that GameStop was cut short of its squeezing potential. So it's, that's he's absolutely right. We never got over that. Months and months of endlessly buying the stock as it went down, of cataloging evidence on the internet showing how hedge funds use options and dark pools to manipulate the prices of the stock. And even recently, Ken Griffin admitting on live TV that he and some other people, some other entities, decide what the price of stocks will be in the markets. These things stand to mean something for a lot of retail investors, and we are not over that. Yeah, absolutely. GameStop never had its squeeze, its real one, because it was cut short by when Robinhood decided to take away the ability to buy. The stock has gained a lot more potential as investors kept buying and shorting companies, kept making naked shares. With the company now seemingly likely to finish fiscal year 2023 profitable and likely to turn into a holding company, the aspects of it garnering more volume go up. It is no longer a deeply troubled investment from a fundamental standpoint as it was only 3 years ago. It's almost an entirely new corporation. So yeah, he's right in thinking that we never got over 2021, but it's not because we're some angry investors that got booted from earning the money that we thought we deserved. It's because we know what GameStop is worth. We know the fact that we will not stop buying as a collective group, which is a problem that shorters have, not us. You see, I can easily continue to buy shares at the pace I am, and I'm not stressed at all because my portfolio is very well diversified. I can take a full loss on GameStop and it's gonna hurt, but it's not gonna end me. It accounts for less than 10% of my entire portfolio, I will admit to that. It's a small amount, but still, I'm still buying, and I will take that risk, knowing full well that it can go to zero or to the moon, and I will invest on it because I think it's gonna go to the moon. Whether that happens this year, whether it happens in a decade from now, whether this whole thing takes forever to materialize, I'm not going anywhere, and neither are thousands of other people. If you go to Supersonk on a daily basis, you will see with your own eyes that people are buying the stock and registering. So what they do in Supersonk is they take screenshots of them buying shares through computer share, and they have these bots that pretty much catalog how many people are buying and how many stocks of that, and then they have the total amount of outstanding shares, and they sort of make predictions on how long it's going to take us retail investors to pretty much secure the float. What I mean by that is what they're trying to do is essentially estimate how much time it's going to pass until we completely buy every single share out there in the market, because they know that nobody's selling, right? Nobody's actually buying to sell GameStop shares at this point. what most of retail investors are doing, they're just pretty much hoarding in the GME shares endlessly. So they know that. They're cataloging everything. It's right there on Superstock. You guys can go and see for yourself. They have bots and everything automated for this. It's a sad thing that I still haven't found an answer for the whole DRS thing, because like when the last earnings came out for GameStop, what was it like? I forgot the number, but essentially it did not change. The amount of DRS shares that it shows that people registered did not change, which we know is a lie. That's not true, because like people are DRSing every single day. I mean, it would just take just a couple people to pretty much change that number, a fraction of it. And that did not happen, so we know that number is wrong. So we still have to like figure out what's going on with that, and that's something that I feel like Ryan Cohen needs to address, whether it's now or in the next earnings report. He needs to talk about that, because that is a very serious matter. But outside of that, nobody's really selling GameStop as far as I can see. Like the whole popularity cloud kind of like moved away. That thing got stuck in 2022 and it's never recovered. So like the people in GameStop right now are like, as hardcore as you can come. They're not selling anything. These people are just like to zero or hero. They're not going anywhere, and neither am I. So his whole argument that he poses in relation to GameStop being a company that is just gonna go out of business, they're gonna go belly up, they're no longer stable, that kind of falls apart, especially with this last earnings report. And the last argument that he brought up was in relation to the credibility of Ryan Cohen's ability to successfully manage GameStop's investment, which I think it's a sound criticism, right? I find no ill with people pointing out that Ryan Cohen has had some failures in his past, especially recently with the Bed Bath and Beyond, where he sold, I think it's like 10% stake at a loss. So, but this guy only points out the bad investments that went belly up. He's not bringing up the fact that GameStop, Wells Fargo, Apple, Chewy all perform really well for Ryan Cohen. I mean, he's a billionaire because of that, and he's not bringing that up. So it kind of makes it weird when you're assessing an individual's investment capabilities and you're only talking about the bad things he has done and not giving a full picture of his entire performance, right? So that's my main problem with that portion. I have no opinion on Ryan Cohen, and the reason for that is because even though he had one bad investment, he also has had a lot of successes in the past. The most important thing here is the fact that we have no idea where that money is going to go into. A lot of people have speculated that Ryan Cohen is going to be buying back GameStop shares. Other people have speculated that he intends to diversify that money into like long-term positions across other stocks in the stock market. We have yet to see what he's going to do. And thus, because of that, we cannot sort of opinionate on whether the investment is right or wrong, because we have no idea where he's going to put the money, which is why this whole part of the article by this guy is just absolutely hilarious, because like he's trying to make a case that Ryan Cohen's investment approach is wrong, but like how can he say that? You have no idea where he's going to put the money in. This whole article is just a puff piece editorial trying to scare retail investors. It's honestly kind of an attack by the way he tries to like low-key insult people that invest in GameStop. And it honestly just solidifies my resolve that GameStop isn't going anywhere but the moon, baby. So let me know in the comments down below what you guys think about the video. Join me in the Discord once and for all. I mean, just look at the trades we took today, people. We have had a massive winning streak on everything we have played so far. Come in and join us already. The Discord is free for everyone to join. You have tons of content there for like new people, experienced traders, long-term investors, everyone alike. So come in, say hi, let me know what you guys thought about the video down in the comments section, and I hope to see you guys in the next one. Peace.